All right, so recording has begun. So, first things first, we're gonna be going over better entries, and I still struggle with entries sometimes, but um, like I've gotten so much better at getting better entries than when I first started. So when I first started, I'll literally just market by everything. Like if I saw stock going really high, I would just market by. So we're gonna actually be looking at Pet V, was it? Oh no, Pet Z. So we're gonna be looking at Pet Z, and as you guys know, this had a huge run up this morning. It halted up. I think Zach Morris tweeted about this. And if so, when it's going up like this, this is actually the 30-minute. When it's going up like this, uh, typically like someone would market buy. Like I used to market buy all the time. So like if it was at like 7:48, I would always market buy right away because I saw a ton of momentum. But if you want to get a better entry, um, if we look at the 5-minute, do you guys see how this doesn't just shoot straight up? Like on the 30-minute, that's what it looks like, right? Because if we go to the 30-minute, and then we look, there's a giant candle. So you would think, oh, I'm gonna market buy, it's going up really fast here. But if we look at the 5-minute, it actually stalls a little bit. And if you say you see it in an uptrend, right? And you see it at 670, 70 or whatever, and you think it's going up, it has a lot of momentum, you see all this volume, and usually at this time, this price, you'll see it's just moving a ton. And you guys who watch these penny stocks in the day, like I guarantee you, like you're like, wow, this is moving really fast, and this price will jump around so much, and then you just market buy because you see it moving around so fast. So then you just market buy, and you're like, oh, I have to get in this before it goes to a really high level. But that's what I used to do, and I used to do that, and then it would be down so much because as soon as I market buy at 670, like say I market bought it then, it would always end up going back down like 30 cents and then ripping. And every time it went down 30 cents, I was like, oh, I'm down. Should I cut my loss? And the thing that might help you better than this, especially with penny stocks, I'll talk about how to get better entries with options in a second. It's kind of the same concept, but with penny stocks, especially ones with super high volume. So let me turn on the volume indicator. I want to see how much volume this is. So this is 3.57 million volume. So that's going to move the price a lot during this candle, right? So if you guys are playing penny stocks and say it's in between a price like 6 and 7, if it's going really, like if it's like going from 6.30 to 6.70 really fast, it usually always like wicks down. And this isn't even a good example, but it always like wicks down to like back to 630 and doesn't stay at 670. So to get better entries, if you guys are playing a stock in between, sorry, I gotta mute that guy. So if you guys are playing a stock in between 6 and 7, right, or in between 7 and 8, or in between 8 and 9, or whatever, and it's going really hot, like, and it's like just jumping around the 8.50 level, and there's all of a sudden it's 8.70, and you want to market buy, I suggest not market buying there. What I would suggest is put like a limit at 7:30, 6:30, 5:30, or even like 5:20, because it always wicks down there, especially because this price moves so fast. So like all of a sudden there'll be a big buyer, and then it just jumps right back up, and like you can't even market sell that or you can't even market buy that fast, because as soon as you see it at 6.30 and you market buy, it's already going to be up again. So for these stocks with a ton of volume where the price is just jumping and jumping around, I like to set limit orders like a little bit above like a psychological level. So like 6.20, 6.30 is above 6, so that's good. And usually like when it wicks down, like it wicks down super fast. So if we look at the 1 minute, let me see if I can find a good example of this. So like like this candle. So say you see it like it's about to break 6, blah blah blah, and you want to market buy, and see how it wicks down from 594 all the way to 578. You could have saved yourself like almost 15 cents there if you put a limit order a little lower, because these stocks with a ton of volume, and you can literally look, with a ton of volume, they always wick down and then back up again. So I try not to market buy if I see a stock's momentum going up. I usually try to put a limit order a little less to get a better entry, so that I'm not down right away, because usually they just like wick down 20, 30 cents randomly, especially with all this volume. And I'm going to see if I can find like a good example of this. I bet you MedX has one. let's see. So I guess right here, no, that's not a good example. Let me go to the 5-minute. I know there's a good example in pre-market one of these days. I remember I set a limit and I got filled, and it like wicked down and shot right back up. So I think it might have been this. So this was at 71 cents, and then it went down to 66 cents, 67 cents, very, very quickly. And I remember this day, literally, like, it went down, and then a bunch of people tweeted, oh, buy the dip. But by the time they tweeted, there was already a bunch of people who had limit orders set here. So it shot right back up to 70. So if you see, like, a stock consolidating, whatever, and you don't want to, like, try to guess the move, and usually I say, like, say you're watching a pattern, right? So say you're like, this isn't even ascending, this is kind of an ascending triangle but not really, or a pennant. So say you're watching this and it really hasn't broken out either way, but you think it's gonna go up. Sometimes I'll put a limit order like a little under, and it'll just drop, and then the dip will get eaten right away. So then I'll already be up on the trade. So that's just one example. Let me go to fun when it rocketed a couple days ago, because this was a very good example. 5, 7. All right, so fun. So right here, this happened. This green candle. I was playing this. This wick happened very fast. See how this opened at 9.11 and then it wicked down to 8, almost $1. That's an example where you do not want to market buy, because say you market buy right when the candle opens at 9.11, you're already down $1, and even though this didn't close under the dollar and went back up, it makes people panic, and then you panic sell, and you do not want to panic sell. So a stock with a ton of momentum, I always put my limit like 20 or 30 cents under the actual price, because most of the time you'll find it actually does wick down there, and you'll get such a much better entry. So that's just something I do. And there is another side of this. So if you do that, sometimes you will not get filled in it, and it truly does keep going up. But that's when, like, say it's about to break 9, and say it breaks 9 and then it doesn't go below 9. Then I would move my limit to like 9.05 or 9.10 if it was at like 9.30, because it usually drops back to the 9.05, 9.10 level. And say my stop loss was like 8.95, right under the 9 resistance level. That would only be a 10 cents loss, versus as if I bought it at 9.30 and then it dropped under my 9, that would be like a 40 cent stop. So I think using limit orders on these running on these high momentum penny stocks is actually very underrated. Sometimes I'll literally find myself being very impulsive, which I need to get better at. Like if I see one, I'll just market buy like right away, and I need to get better at that. Like I think putting limits will definitely give you better entries, because they always wick down. Like even though this opened at 11.27, if we look at the 1 minute, I want to see if this tells me anything different. So if we look at the 1 minute, we need to go to the 24. I don't even know if we can go there. So I guarantee you, if we looked at the 1 minute instead of the 5 minute right here, like it probably, what is happening? It probably, okay, why is my screen blank? I do not know that this just happened. You guys can hear me, right? I'll go over MedX in a second, Banner. Oh, that's odd. Yeah, you guys can hear me, right? Someone type in questions if you can hear me. Alright, there we go. So let me go back to fun. Yeah, I just froze for a second. I don't know why. Wait, can you guys? Did I just like cut out for you guys? Oh, that's weird. All right, so if we go back to fun, or I want to go to like a really big giant candle. Let me try going to Pet Z again. So this is what this candle looks. So this is what this candle looks like on the 5 minute, right? It goes from $6 to $7. So this is almost a dollar candle. And this is at 10 o'clock. So if we look at the 1 minute, this might not be a good example, but usually, like, hopefully this is a good example. So it goes, so this was at 10 o'clock right here. So this is at 10 o'clock. So the 5 minute candle went from here. It went from this open, and it must have closed at 10:05. 1 second. So this is at 10 o'clock. So it doesn't look like these are matching up. But if you look at so what I'm trying to say, if you look at a 5 minute candle, like say you just look at this 5 minute candle, usually it like opens here and then it'll go up like to 370, and you're like, oh, it has a lot of momentum, and then you buy in, and then it always drops back down, and then it goes back up. And you'll notice that with the 1 minute candles. Usually the 1 minute will be like, it'll make a high, and then it'll drop again, and then it'll go past that high, drop again, and then go up again. So I like looking at the 1 minute. Like, let me try to find a good example of this. So if we go to the 5 minute on this chart, let me look around 330. So this is what the 5 minute selling candle looks at 330. It's all red. And then 330 right here. So if we look at 330 here in the 1 minute, it drops, like it has the same drop, but as you can see, these wicks, like you could have gotten, like say you're trying to short this, you could have gotten better fills if you put a limit a little off the wicks. And this is a bad example because this isn't that much of a move, but with other stocks like large caps, they'll literally have like $1 wick, and if you put a limit like 20 cents, 50 cents above or below where it's actually at, it always like goes there and then bounces. So just make sure you're watching the trend. Like if it's in a downtrend, and if it's in a downtrend, you're trying to short it, put it a little above. But if it's in an uptrend and you're trying to buy it, then put it a little below. It's honestly takes screen time to try to see what I'm talking about. And as you guys play these penny stocks and watch this price, you'll realize what I'm talking about soon enough. So like you'll see that this price is just jumping around. Like every second is just going crazy because of the amount of volume. And it always goes from like 690 to 650 to 680 to 710 to 640 all the way back again. So limits with these high volume stocks are very important. The only time I wouldn't really use limit orders is if like they didn't really have that much volume and the price wasn't moving that fast, because usually you don't see those major wicks down. Like for example, this is see this wick, this is on the 1 minute. Say you tried shorting, so say you saw this candle and you tried shorting, and say you saw it go red, and so you tried shorting 850, it literally wicks up to 884. So like this happens a lot, and look at the volume in this. 1 million volume compared to all these short candles. So the price moved a ton here, and it just like jumped around. So that's why I don't really market buy. I mean, I do sometimes. I still need to get better at not doing it, but that's just one really good example. So that is one way to get better entries. And let me just talk about options real quick. So if you want to get better with option entries, I kind of like, it's kind of the same thing, but if you're looking at contracts, so say you're trying to play SPY and you want to enter 0.79, 0.80. With SPY and these really tight spreads, it depends on, so this is where I really can't explain. This just takes screen time to try to explain what I'm about to explain. But say you want to, so this is the 1 minute. Let me go to 1140. Let's see. So the 1140. So this is 1140, and then so we got this red candle, and then this green candle, and then 1140, and then this is 1140. We got this red, and then we got this green. I don't know why those charts don't really match up, but that's kind of weird. But so say you're trying to get an option fill, like say you're trying to go long right here on this giant hammer. A lot of times people will buy in after it breaks their trigger price. Like I do this all the time. So I'll buy a call. I'll see this hammer. I'll buy a call. And I think it's going to have a nice reversal. So I'll buy it. It's 46.7.50, right? and then sometimes it will jump like you see here, but before it closes, it goes back down again. So like, say I buy a contract at 0.50 and it jumps, the contract goes right to 0.55. And when you buy options and it jumps right away, the option price is jacked up a little bit, so it goes higher than normal. And then when it drops back down to that same exact price you bought it for, sometimes it goes lower than the price you bought it at for because of theta. And hopefully you guys know what theta is. If you guys don't know options or don't trade options yet, don't listen to this. I'll go over another topic in a second. But so if you want to enter, say you're entering at 0.50, it goes up to like 0.60, and you still think it's going to keep going up, as you can see it continues going up. And it comes back down and it drops below your entry. Sometimes they'll actually put a limit like 0.02 or 0.03, a little lower, depending on the volume. And it's really different for every stock. Like I said, this takes a lot of screen time. With options, the volume for these contracts is so good, and the reason why you can tell is, one, you can look at the volume obviously on these, but another reason is the ask is 0.80 and the bid is 0.79. So that is 0.01 off, and spreads like this is a very, very tight spread. It's literally a 0.01 difference, tenth of a difference. So like that's how you can tell they have good volume. And so for these contracts, like I don't really I don't put limits below really, because usually if SPY is making a big move, it tends to keep going up, but it depends on the ticker. It depends on like what is happening. So here, I got a good example. So do you guys remember the meeting? It was, I think, last week. Does anyone know what day that meeting was last week? Was it Wednesday? It's a really good example, the meeting. Yeah, so right here. So this is where we had the meeting, and everything was trading sideways, and then as soon as we saw this giant green candle, this green candle went from 460.88 all the way to 462.69, almost a $2 move. And say you try to buy a contract like way up here because you're like, oh, it has a lot of momentum, the next candle is going to be really green, and you buy a contract for 0.50 and it drops, and then your contract goes to 40. So a lot of times if we get these giant candles, sometimes it's, if you're buying at the top of a candle, I would expect it to go down, and I would expect to average down, especially if you're buying at the top of a giant 5-minute candle. But another thing you can do is, if you see a giant green candle and you expect it to pull back a little bit, like we see in this situation, this is very healthy pullback. We see these pullbacks a lot. You could put your limit order like 0.05 under. And on TOS, on Thinkorswim, there are ways to buy an option when it gets to a certain price, no matter what the price of the option is. And I think that's really good. I've never done that before, but I actually just found out you could do that the other day. So like, you could put it, so once SPY reaches 462, I want to buy a call. You could, at whatever option price there is. So you can do that on Thinkorswim, not on Webull. But on Webull, you can still set a limit a little lower, especially if you don't want to buy at the top of a green candle. I hate buying at the top of green candles because we never really see, if there's a giant green candle like this, it needs a pullback. Like literally, this went up $2 in.
Ryan, what are you doing?
What?
What are you doing?
I'm teaching a class right now.
You said you had homework.
Yeah.
That's not homework, and I cannot get on my internet.
Okay, I'm almost done. Alright, my bad, guys. That was my mom. Sorry about that. So let me continue explaining. So like I said, I never really buy at the top of candles. We do see this little pullback. This was expected, because if it goes $2 in 5 minutes, like that's just insane, especially for a large cap like this in SPY. So we saw a chance where we could have put a limit below where the candle was, and then we would have gotten filled at that lower limit, and then that would be better, because say we bought some rent right here, you would immediately be down. So that's why I like putting limits a little below the price that I try to go in. But it depends on the stock. It depends on like the news and stuff. Some stocks, as soon as they see news, they just rip, and it takes a little longer for a pullback. So sometimes I will market buy. And with screen time, you will realize and you will start to learn what you want, like when you want to market buy versus when you want to limit buy. But that is the start of how you can get a better entry. There's more to it. A lot of it is just, it comes with screen time. Like I said, like it just depends on the ticker, depends on the setup, blah blah blah. It depends on the news, it depends on the volume, and you'll start to realize this. But hopefully that helps a little bit. And remember, if you don't get filled and it keeps going up, you didn't lose it. You just remember, you aren't losing money. That is a win. You are literally saving your capital for another trade, even if it goes up. And like I said, if you try to put a limit at like 730 and it breaks 8, and it's at like now at 850, you can put your limit at like 8.10 and 8.20. You try to get filled there if it just wicks down there for a second, and then it usually always goes back up. So that is just one thing I've done to get better entries of penny stocks with a lot of volume. And like I said, you'll learn with screen time. So that is that. And I'll go over MedX real quick. If you guys want me to go over some charts in chat, I'll go over some stuff. So let me go over MedX. So MedX, I think it's gonna hit 1. It's being pumped so much on Twitter. It's probably going to be a little bit. It needs to break this 75 level. This is a key level. I think it might gap up in the morning. It honestly depends. And I think Zach Morse is in this. This is the next key level to break. But I think this is going to keep getting pumped until it hits 1. So if we look at this in a month, it'll probably hit 1 at some point. But it doesn't really. It's a penny stock. It doesn't really follow a ton of technicals. But we did see good price action today. It had a low, created a higher high, created a higher low. So this is something I always look for. I always look for higher highs and higher lows. So we saw a low right here, and then we saw a higher low. So that identifies it as an uptrend. And then we see consolidate, and then another leg up. So I see it set up a ton, and we literally see a nice bounce off of VWAP right here. If you guys haven't watched my VWAP video on YouTube yet, definitely do it. These are real, like, so many penny stocks just bounce off VWAP, like, after falling down, like, because everyone on Twitter starts to pump it around this time because they know VWAP is a very crucial price. So I always buy in VWAP, and literally today I bought PetZ on the VWAP. So I bought it right here, and even though it never made another higher high, it actually got rejected. You can see it gets rejected right here. It doesn't close over, it gets rejected again. Rejected. Even though it never made another high, I had a good entry. I entered around 830. Like I said, because I saw this price bouncing around a ton. It was bouncing from like 810 to 8.30 to 8.40 in like 2 seconds. So I put a limit at 830, got filled. And then I sold half at like 8.60, then sold my full at 8.70 because I saw how heavy it was here. But I see these setups so much. Like, if you guys see a really big runner for the day, like 100% runner, they always fall back to VWAP. And once they start falling back to VWAP, like that's when they start getting pumped on Twitter, or like people will start alerting them in the Discords. They'll be like, oh, adding this dip ad on the VWAP or whatever, and they usually have a few legs up. And as you can see, this had a second, so it goes up, has a second leg up, and then almost had a third. And I think the second leg is the most important to get into, especially if you missed the first move. I see this so much, and I literally have seen this like 3 times in the past week. So if we look at PPSI, I alerted this the other day in my Discord. I alerted it right here. I saw this hammer, and I saw this bouncing view up. I said this is probably a good time to get in. And then I started seeing other people alert it as well, and that got pumped again from 8 to almost 9, almost $1 move. Actually, no, this was today. I did not alert that. I'm sorry. It was right here. So I alerted like around here, around this consolidation. This is called the low volume pullback. It did go a little under view up, but as you can see how this consolidates and doesn't have a huge sell-off. Like, you don't see any volume candles with like giant red volume candles selling the price. So that's a very good sign. And this is a low volume pullback, and I literally see this in so many penny stocks. If we look right here, see how this volume drops and it holds this price on this low volume. and then we see more volume comes in because it holds this price on really low volume. And if it's holding the price on really low volume, that's good, because that means people do not want to sell. So again, we see that here, people do not want to sell. It's just consolidating, and see how long this consolidated. That was really good. That meant it was probably going to make a big move either up or down. And we did see it break. We did see it break to the upside. So as soon as it broke over view up, that would have been your buy. I like buying I like buying stocks when it closes over a view up, so that would have been a nice buy. So look for the setups on like 100%, 200% runners out there. I guarantee you there will always be a second leg up, because once it gets to a certain point, people start alerting it in their Discords. They'll start pumping it back on Twitter. I see this so much, and I knew like this already ran from $3 to $7. That was almost 100%, and it was still up 90%, and it was consolidating on this really low volume. So when I see that, that is literally asking to get pumped again, and that's exactly what we saw. With good price action comes volume. So that's what we saw, and that is one setup I play a ton. I do not play this on large caps. I play this on penny stocks. So I usually play it on penny stocks that are up like more than 50% a day or more than 100% a day. So if you guys do not feel comfortable playing that yet, make sure you guys are watching. If you guys have Webull, by the way, DM me if you want to sign up for Webull. It's better than Robinhood. It's one of the best brokers in my opinion. Just DM me. But Webull, I always look at the top gainers list and the top volumes list, and it's actually really helpful for me. I do not use FinViz. I like using the Webull because it tells me like it's just right there. It's on the app I literally trade on, so I literally click two buttons and I can see the top gains of the day. And this is where I find stocks with these setups like this. So it's very easy. I've seen this so much. Like it was very simple buy. It was just consolidating on low volume. No one wanted to sell, so that would have been a good buy signal. And then we started getting it. We started seeing it get alerted in other Discords. Let me go over MU. I really like MU. I really like MU calls for swing. So we see MU, and it broke this downtrend support. This is a very major downtrend support. So I think we're going to see a lot of continuation up. And I always look for higher highs and higher lows, like I said. So we see this create this high, and then it keeps creating a lower high. So lower high, lower high, lower high, lower high, lower high. And usually for reversal, we need to see it break the last lower high. So on MU, it's kind of a little sloppy. So I'm going to draw a zone actually, but this is about the last lower high. So we need to see it break this area right here, I think. So we need to see it break that area, and then we need to see it break 77 to be safe. So I think over 77, that'll even be more solid. And I think 77 will definitely test 80. I did alert some 80 calls for MU for next week in my Discord that I alerted them at like 0.49, and now they're at like 0.65 or something. Or they were this morning in that huge run. But I'm really bullish on this. It has a nice downtrend break. There isn't much to this chart, and I really like simplicity. And this is very, very simple in my opinion. Literally just a downtrend break. And it's literally about to break the last higher low right now. So you got 175, 11, 12 call that's up like 100%. I hate getting one call because usually like I would say, oh, you should scale out, but you can't really scale out if you have. Yeah, it's all right. Yeah, you can't really scale out if you have one. I don't want to tell you what to do, but I would hold it as long as it holds 75. I think 75 is a key support. 280 calls for 11, 12. Yeah, I alerted 80 calls, so you can scale one out. Are you up on those right now? What's your average? These are sitting at 0.51 right now. 0.14. Wow. And are you still holding full? That's crazy. Did you buy him because of Shinobi? Or did you buy him because of Unusual Whales? You're up like 400%. found them talking about them, see them on whales. Yeah. Yeah, Axe gave him the insider. All right, so a couple other patterns we're gonna look at that I play a lot. I'm gonna actually go over my favorite pattern. I love it. I like playing double top breakouts. So I'll try to. Like I said, I don't go over the charts before this. Axe, I did look at that chart. Axe, did you just get in here? I just looked at it. Good song choice. Wait, what song choice? All right, so we're just gonna be going over double top breakouts, which is probably one of my favorite patterns. I play them almost every single day, and I like to play downtrend breaks. So I saw a downtrend break earlier, and I'm always looking the 5-minute for these. A downtrend break is simply where it breaks a downtrend. So we see SPY reject off here, almost rejects it off here. And before I saw this, I actually had this line like this. And we see this downtrend break fail, actually. But the reason why I didn't play this earlier is because, one, I was in class. And two, I didn't really like the wick on this candle. This told me that they did not want it above this 467.20 price. And I actually had an alert there. If you look this alert, I put it at 467.20 because that was the last lower high. So I knew once we saw a break of that, we would see continuation. And I put the alert when I was right here. I actually put the alert. So we see it actually go to this 467.20 and it taps it. And I did get an alert. I looked at it, but I saw it was rejected, so I didn't buy in. And then it breaks this level, this 467.20 level, and then it continues up for the rest of the day. So I like downtrend breaks and I like double top breaks. This is a downtrend break. This fails, but you could have made the downtrend break right here. And as you can see, we see it close over and then it kind of retests, and it doesn't go under or below. It just kind of stays the line, and then we see a nice continuation up from that downtrend break. So I see this pattern a ton. I play them a ton. And then now we're going to be going over double top breaks. Let me try to find a double top break. Let's see. Let me go to my watch list. This would have been a really good break above all these levels, but we didn't see that. Yo, Gazer Beam, your spot. That's actually so funny. You're like, good song choice. It's actually your song. No wonder why it's good song choice. Oh yeah, there's a double top break on Lucid a couple days ago. So right here. So this is a perfect example of why I play double top breaks. See how it double tops right here? It's almost a perfect double top. Double tops, double tops. As soon as it see this nice green candle on this much volume, see how this volume was more than all this, and it closes over this huge double top, we literally see a continuation from 40 to 42. That is a huge move, and double tops will give you these moves a lot, because so many people are eyeing for these double top breakouts. And if you think about it, like, the double top isn't even a pattern. It's literally just a break of resistance. So it's resistance support, but it can be like, it is a pattern too as well. It's just something that I always play and always look for. I think they're the easiest for scalps in my opinion. I love playing them. If we look at IWM, oh wow, this was ugly today. This is actually a nice wedge. It's a rising wedge, and rising wedges usually go down in price. So this was a nice wedge you could have played. I didn't even look at this today, but that would have been nice. See how it gets really, really tight and keeps making higher lows but lower highs? That means it's consolidating. and then we see it have a nice drop from here. So your entry would have been after this red candle, and then that would have given you almost like 60-cent move, and that's really good with options. And as you can see, it continues to sell off the rest of the day. I'm actually bullish on IWM. Let me draw a fib on it really quick. I'll go over fib from some other time, by the way. How do I? Oh, I hate. I do not draw fibs in Webull. I can't really like. I can't see everything. Okay, so I don't have the fib. I don't have the extended fib on this. And I don't want to go into US right now, but yeah, usually there's an extended fib you can draw. I don't know where this is sitting on the fib. I'll go over fib lesson another time though. Does anyone have any more charts? I have to go do homework, but I'll go over some more charts. I'll go over one more chart. Fib. No, I want the. Oh, there we go. Yeah, let me go back to IWM. I knew I had it. I do not really do fibs a ton. See, you can't see it. Okay, so it got rejected by this 100. We need to see a. Actually, I don't even think this is how you draw it. And you can't even see this full picture. This is why I do not like. This is why I do not do fibs on Webull. It's really annoying. I'll go over fibs another time. I'm trying to zoom out. I really can't right now. You use TradingView for fibs? Yeah, I do not like fibs on Webull. I don't really use them anyways. I like simple break, like downtrend, double top breaks, stuff like that. All right, so let's go over one more downtrend break. I see downtrend break patterns ton. This would be a very good double top break. Like, if GME broke this 350 level, it would skyrocket. Like, these setups are so good. And I doubt it ever will break this, but I'll put an alert actually, because I will 100% go heavy if it breaks 350. Like, that's an A++ setup. Double top breaks are an A++ setup in my opinion. You want to be looking for those. Let's go to AFRM. Let's try to find some intraday double top breakouts. Okay, so this is another huge level. This is almost like a 1, 2. This is basically a triple top. And we actually see, you can't really play this because it gapped up pre-market, so like you couldn't really play that. Wait, oh no, this is low. You couldn't really play this, but if this were to break this line, if this were to break the 239 level during the day, and if you guys notice, this line is actually 238.95, but because it's so close to 239, that's like a whole number. I play the break over 239 because it's a psych level. I do not like playing breaks over random numbers because a lot of the times you find the walls on the whole psych levels. So I like to round up or round down the psych numbers if it's close. So like 239, 239.5, 230, 240, 240.5, like that. But that's just all preference. Oh yeah, I'll go over AMD. I'm actually in this on my school account. So we saw this nice uptrend, and with a huge pop like this, it always falls down, and we saw that huge flush today. What goes up this fast will come down this fast, and that's exactly what we saw today. And SPY also helped with this a lot. Like SPY went down a ton, so that contributed to AMD going down. And last time, remember I talked about bear flags. We see this giant red candle, and then we see consolidation right here. This would have been a perfect time to reload puts or get in puts if you missed a move, because if you look at an inverse chart, whenever you say pretend this is a green candle, there's always a little consolidation and then there's always the next leg up. This is just the opposite. There's a giant red candle down, consolidation, another giant candle down. And I honestly wouldn't have bought puts in any of these candles. I probably would have bought them right here because this is a nice bear flag, and I would have expected another leg to go down. So and again, this is going back to the entries, how to get better entries. We see this wick all the way down to 1.51. We see it wick down all the way to 1.51, and then it goes back up. So say you entered puts right here, you would have been down so much. So when I enter puts, I like to go a little above rather than just market buy, because you could have been down so much because it literally went down almost a full dollar, then went back up again. So you would have been down like 30%, 40% at least, and that would have caused you to panic. So. And then I did go over candlesticks a couple nights ago. This was a very, very nice candlestick. I love hammers. This candle would have been confirmation to go long, and that was a 147 to one. That was almost a $2 move, and it got rejected by 150. This is a double top, by the way. If AMD breaks 150, I will 100% go long, because this is another A++ setup in my opinion. And I drew the line a little above these. I drew it at 150 instead of the actual number because, like I said, I like psych levels. And it basically did get rejected by 150, even though it in reality got rejected by 149.86 because it's just so close to 150 and it's such like a big number that's like it's basically 150. So over 150, I will go long again in this. I'll actually set an alert right now. And it'll be a very easy scalp. I won't hold it for long, but it'll be a nice scalp in my opinion. When a stock breaks resistance during the day and you get an alert for it, you normally wait for a book back. I usually wait for if I get an alert that a stock's overpriced, I usually look for a 5-minute close over it. Some people use the 3-minute. I just prefer the 5-minute. How much are you playing with when scalping session these? For these scalps, I go in light because I see so many of these setups every day that I want to go light because I like to play like 5-6 things a day. So like I'll literally go in and sell after 5 minutes, and then I'll just move on to another position. Go in, light, sell, and I'll usually have like today I had 4 10%ers, so that's 40%. And I'm like, it just depends on trading style. That's my trading style. I like base hits. I don't really hold for that long. I like scalping for base hits because 10% is very good. Yep, compound gains. I built my account so much. My last red day was like, I think 2 Fridays ago, and my last red day before that was like a week before that. Yeah, like 2-3 contracts at a time, depending on how expensive they are. If it's like if they're like $20, $30 contracts, maybe like 4 or 5, but it just depends on your account size. Try to make your position sizes the exact same if you can, or close to the same, until you're up like $500, because if you're taking a position, I'll answer that in a second. Yeah, so if you say you have $2,000 in your account, say you take a position and you take a $500 position, you think it's going to go up, and you take a $5 position or $500 position. If it goes up 10%, and you sell it, that's good. You'll be up, whatever 10% of 500 is. I can't do math right now, but you'll say, and then the next time, say you go in with $1,000, but that's a loss, and you say your risk reward is 1-to-1. So when you go in with $500, you take the 10% and you're happy, and then you go in with $1,000 the next trade, and it goes down 10%. Even though you're still down the same percentage as when you're up as 10%, your position size is larger, so you will lose literally double of what you already gained. So try to stick with like the same position sizes if you can. That's very important. Yeah, I usually do weekly contracts. If you want to be safer, go next week, but they won't move as fast, but they also won't lose as fast. Yeah, so weeklies are more risky. Like Monday's the least risky, Tuesday's more risky, Wednesday's more risky, and Thursday and Friday are even more risky because they expire so fast. So these will even move faster tomorrow, then move faster the next day. And then Friday, these move really fast because if these will all expire worthless. No one wants to exercise these. You don't really need to know about exercises, but you have to understand if these are in the money, that people want in the money contracts. So these are worthless if they're out of the money. So say like on Friday stock's at 148.5 and it's going to 149, this price will go up tremendously because it'll start to gain value if people think it's going to go in the money. But if it goes way out of the money and the stock price starts dropping and people think, oh, this is probably going to expire worthless, they'll all sell and this goes down a ton and Theta destroys it. I use a cash account. Because I stopped getting super out of the money. Yeah, I wouldn't go that far out of the money. There's not a lot of volume on these. Yeah, that's just because there's like no liquidity on these. Sometimes you get filled at really bad prices. AMD is like a ticker with a lot of volume, but if you go to like a little less popular ticker like maybe CAT, the volume on it was pretty good today. But if you go to CAT, look at the spread. 0.17 to 0.03 spread. No one trades these contracts back because like there's no volume. How much volume do you like for your contracts? I do not like the volume. I play the spreads. And I only play tickers that have a lot of volume in the first place. I do not check the volume of the contracts. But I don't even know what contracts, like what good volume is on contracts. I just play tickers with a lot of volume. And usually the options like 1 or 2 out of the money. So this would be 1 out of the money. This would be 2 out of the money. Usually these have like good volume. So if I'm looking at a stock with like no volume, so CEI, I mean there's decent volume in this, but these options have like no volume, and you can literally tell. So I will not play these because I'm trying to find out where to get the volume. The open interest is 18,000. Where's the volume? I don't even know where the volume is on this, and I do not know. I don't know where the slider is to move volume. Alright, so the volume in this 91.14. That means only 14 contracts are being traded, so like 276 would be decent volume. So this is 276 volume. Let's check out a SPY contract. $151,000 volume. So this is why I trade SPY contracts. This is insane, and it's way more than the open interest. I like contracts with more volume than the open interest, even though I don't look at them. The volume is 150K in this, and the open interest is only 5,000. So that's just insane. And there's usually more volume in the psych levels. So see how this is only 94,000, and then this is 120,000. It's because this is a whole number. It's like 470. It's like a whole number. So again, we see a drop in volume in the 479, but more volume in the 480 than the 479. Let's go to like 20 days out. Wow, these are actually 20 days out. This is actually kind of cheap. Like in 20 days, SPY could be like at 480. Imagine how much this would be, bro. Wow. Let's go to a month out. 470. $500 for one contract. That's not bad. Wow. I might actually try one of these one time. Why do you think Twitter traders call way out of the money? Oh, Twitter traders call way out of the money contracts because they pump their contracts. So like Prophecy, they don't pump all their contracts, but I mean they truly like they know how to trade, but like and they know how to trade, but they have so many followers where if they call like a random, so say they call CEI a 1.5 call, it'll probably get pumped up. So the bid will start to like the bid will be like 0.10 and the ask will be 0.15. They have so many, like they know how to trade. no hate against them, but they definitely know how to trade. They have money for a reason. They've made a ton of money for a reason. They didn't make it just from pumping contracts. People think, oh, all they do is pump, but if they call these really low volume tickers, these really low volume options. By the way, this is 18,000 because that's how many people are trying to sell. No one's trying. There's no buying volume on this, as you can tell. It's at 0. But if they call something, it usually gets pumped up like $1. But they are good traders. They did get money. Like, they know how to trade, trust me. But sometimes when they do call these no volume tickers, they'll pump it by accident, or I don't know if it's on accident. Some people say, oh, it's on purpose. I have no idea. All I know is they're good traders. They can do what they want. Like, I respect them. But yeah. He called Nike. Yeah, because he called the Nike. Prof called the Nike way out of money call because he didn't call it for this week. He called it for, like, I think next week or 2 weeks out. So if it's like 2 weeks out and you're looking at really out of the money, usually those are not bad because it's 2 weeks out. So, like, the price definitely has a chance of getting here. I don't think he was pumping the Nike, to be honest. They probably pumped it by accident to begin with, but I think he truly, like, if you look at the daily chart, like, it looks like it's going to go up. Like, it's making a higher low right now. There's a nice green candle today. Like, I'm bullish on this. Yeah, it's in an uptrend. So, like, he knows how to trade. Like, it's truly going to go up. And it broke this last higher high. So it broke that, closed above, and then it made a nice 4-point move. Can you explain what you mean by 4 point? 4 points just means $4. I used to be so confused when people were like, "Oh, move 5 points," and I was like, "What's a point? Just call it $1." But people call it points. All right, that's all I have right now, guys. Wait, let me just check the other CSX chart. Yeah, let me go over CSX. Sorry about that. I gotta do this quick. CSX. All right, I already like this chart at first glance. It's literally an uptrend. You can see lower high or higher low, higher low, higher low. It's making higher lows all across the board. We did see it make a lower low right here, because right here it literally made a lower low. That's pretty self-explanatory, but it did make a higher high, so it's still an uptrend in my opinion. This is a nice hammer candle. I will actually put this on my watch list right now. I really like that candle. If we see a nice green candle to like above 36 tomorrow, I might go long on it. But we did see an evening star candle right here, which signifies a reversal. And yeah, so I really like this chart. I think it's going to make a higher low right here. I don't do DD, but I really like this chart. I'm bullish on it. Let me go to... Yeah, KR, last one, then I gotta go. KR, I'm bullish on this. You literally higher highs, higher lows, all across the board. We see a nice falling wedge right here. Notice how fast I'm picking up these patterns. Like, I've looked at so many charts, and they're so easy to recognize. And the more you guys look at these charts, the more you guys will learn these patterns very quickly. You'll be able to spot them out pretty quickly. So this is kind of a sloppy falling wedge. Closes over this line, goes up, obviously. It's in a nice uptrend right now. It just made a higher low, but we kind of see it fall down a little bit, but we see that after it makes this higher high right here, it actually does fall. That's not an example. This could be a lower high, but if it goes below 38, I'll be bearish on it if it goes below this level. But right now it's making higher highs and higher lows. And I think the next spot is test is this 48 level, obviously. So over that, I would go calls. I'll actually put an alert right now. 48. Two seconds over options. What do you mean by that? This move from 39 to 43 in 10 days. That is in almost 2 weeks. That is a $4 move in almost 2 weeks. So, like, these 42, 43, 44 contracts are probably just going to keep decaying. I don't, like, if you look at the flow to this, it is free float, almost $1 billion. So this moves very slow. So I think if you get, like, these contracts, I would go, like, $10 out. Or I would go, if you want to do weeklies, I would go, like, the 40 calls or 41 calls because they're already in the money. But this is a very slow mover. I hate playing stocks like this. Is that it? Yeah, no problem. Yeah, if it slacks a slow mover, these contracts will be cheap. Most of the time they do expire out of the money, but see how this is so close to 42 right now? If we look at the 3-day, see how much of a difference? This is almost 200%. This is 200% up from these, and this is only 100% up. And then 80%, 60%, 50%, whatever. Like this is actually like 40% up. But if it goes to 40, if it literally moves 7 cents up, these will probably be at like 0.4, like 0.50. Like the ass will be at 0.50. So playing if this is really close to in the money, on slow movers, those can be very rewarding. Like Clove, you have a night, like, see how this is really close to 7.5. These 7.5 contracts, they move a ton throughout the day. Like if we look at the daily today in Clove, 7.37 broke 7.5. So these 7.5 contracts right here were probably at 0.05, and then up here they're at like probably 0.20. That's like 400%. I know a lot of people who play stuff like that. And now it's just above 7.53, so they're 0.20 now. But if this goes to 7.47, these are probably going to be like 0.10. All right, that's all I got right now, guys. I got to do homework. Hope you guys learned something. I'll be uploading this to my YouTube right now. So, yeah, thanks for watching, and peace out. What? X.